Good evening, friends, and welcome to another live stream by the Option School, where we talk about option trading strategies, option trading, and option trading adjustments. And this is your friend Pradeep Singla. So, hopefully, the expiry was very well within the required range, and hopefully, it has worked pretty well for all of us. And sorry, there is a slight delay, and we have been getting a request that okay, if we can do some kind of a option chain analysis for some important stocks also. We said okay, why not? Let us start it with Reliance because today Reliance is the most important stock based on today's data. I'm not saying anything otherwise, but based on today's data, if you see, Reliance is the most important stock, and I'll show you that, right? So welcome to all of you for this another live stream, and we will be looking for something like what is the IV advantage. So there are certain kinds of trades where before hitting the trade we need to see that whether the IV advantage is there or not. If it is not there, then chances are that we should not be doing anything uh, similar kind of a trade. Anything which requires IV advantage, we should not be creating those kind of trades in the script. And that advantage as of now is slightly missing in Nifty, and we will see. Hopefully I will be able to pull out some charts, but let's see. Right, so let us start. And all of you who are new to the channel, please go ahead and click to the subscribe button. Also click to the bell icon so that whenever we are doing a live stream, which we are doing on most of the working days at 9 p.m., you will get a notification also, right? And all of you who are already part of this family, you know which button to click. Even before we start the video, we need to click that like button. And thanks to all of you who have already done that. What Mr. Akshay is saying, hopefully you're maintaining good health, Mr. Akshay. Yesterday advice of rollover of pull call, deferred loss of 15K. Okay, it's a deferred loss, but hopefully you are able to convert it into a profit maybe in few days, right? Good evening to everybody, and holding shares of Reliance over last 3 months at 1980. So today it's giving you good profit and audible. Thanks Akshay for confirming. Good evening, Upali ma'am. 90% of time expiry respect your views. It's not my views. It's basically traders' view which we are reading, right? So good. So thanks to uh, all of you for some good comments. Right, let's see what is happening, what has happened in the market. I will say a relatively decent expiry, not very volatile. If you see from here also, 15188 to 15065, much less than 200 points. It's almost 120 points. So that phenomena continues, that okay, normal days are more volatile than expiry days. So all the conventional wisdom, all the basics of options, that okay, see, be careful on expiry days. Expiry days can be very volatile. Normal days are less volatile. All those things are going for six. Now most of the times we are seeing expiry days are much lesser volatile compared to normal days. Normal days we see this high to low movement is definitely touching 200 or sometimes more than 200 also. But on expiry days, I'm saying it is very subdued. Now any high to low movement within 100 points, we can see that okay, markets are pretty dull, right? So where did the expiry happen? 15173. If you see today market, yesterday, in fact, yesterday night markets were showing a big fall, that there can be 80 to 90 points kind of a fall. Today market started on a lower note, but not that much, 15073. So yesterday when we were discussing, markets closed at around 15106. So it was hardly a you can say 33 points kind of a gap down for opening. But then markets from there recovered pretty quickly, and then they were traveling in the positive zone only, right? Once the markets were in the positive area means once they have gone past yesterday's closing of 15,106. So there was no looking back, and market for the whole day maintained that uh, positiveness. Now 15,110 and above, and closing at 15,173. That means maybe from this time onwards, somewhere close to 9:30, markets were very well within a range of what, hardly 60 points. So that's why we are saying markets were pretty dull today. So this is the expiry phenomena most of us are watching nowadays. Yeah, but yes, from open to close, definitely there is a 100 points move, and from yesterday's close, 67 points move. So not much. Thinking that okay. This week was pretty much okay for most of the option sellers compared to the previous week. Previous week it was a nightmare where markets went up by almost 1600 1700 points, right? So even high to close is pretty okay, not much of a difference. Yes, there was a small low, but then this was not a whipsaw market also that okay, which was going negative, then positive, negative, positive. No, no whipsaw movements. Market once it crossed yesterday's closing of 1500 106 or 110. After that, hardly any move. 60 70 points move on an expiry day is hardly anything, right? So a stable expiry we will definitely say, but yes, it has not gone down to those levels we expected. It has not gone up also to those levels of 15,250, etc., what the option chain was showing. So those are the extreme levels, and obviously not every time market will touch this extreme level. Sometimes we have some dull expiries also. So today's expiry definitely qualify for a sort of a dull expiry, right? But again, good for most of the option sellers. And today we saw a little bit of divergence. What happened? Bank Nifty closed negative and Nifty closed positive. Nifty closed positive because of only one thing, that was Reliance, right? If you see the Reliance thing, it contributed 65.93 points in Nifty today. So Reliance was up by 4%, contributed 65.93 points, and how much market was up? Market was up by 66.8. So this chart basically shows you that okay, what is the individual contribution in overall Nifty? So out of 66.80 points, 65.93 points were contributed by Reliance only. Otherwise, our markets would have also gone down. So rest everything got balanced. If HDFC Bank was taking away 6.96, Hindu Unilever was giving 6.21, Bajaj Finance, L&T matching. So otherwise, it was a much more dull day. Had it not been Reliance, the market would have moved only 30 40 points here and there, maybe, I don't know. But whole movement of the market, whole positivity of the market of 66 67 points is contributed by only one stock, which is Reliance. So that would definitely mean that okay, this was not a very broad kind of a moment in the index, only one stock picking up everything. And if you see on FIs, DIs front also, FIs were still buyers and DIs were still sellers. So not very big figures from anybody, and that's why markets. But yes, when markets are very close to all-time high, that time even if market is going up by 0.5%, even if market is going by 66 67 points, that again give butterflies in the stomach that okay, this market is again whether it's again running up or whether there will be some more consolidation in the market. So that's why I said today's most important stock was Reliance, because it single-handedly carried the market. Otherwise, we would have seen a 15,100, almost 15,100 expiry, which was the outcome of whatever analysis we were doing yesterday, right? But anyway, hopefully all of you did pretty well in the expiry. So what Mr. Kamo is saying, long in Fab futures from 1850, should I wait or book? We will analyze and then you can know what can happen. Also short 1600 call June. So if you're long in future at 1850 and short in 16,000, so there is no respite for you unless and until you see. Now this is a position which is very difficult to analyze, wherein deep in the money call is short and future is giving you profit, but call is giving you more or equivalent loss, right? And for 50% breakfast hurdle at 2090 2120. Okay, Mr. Akshay is giving us some inputs. Uh, what Mr. Gunjan is saying, today mid cap and small cap was strong, and from today market opening, and VIX dropped by 4%. Yes, VIX dropped by more than 3%, and that sort of a change certain things. So if somebody asks me that okay, why we are analyzing option chain of Reliance, one thing is yes, we were getting a lot of requests that okay, can we see some analysis in some option chain of stocks also. And another reason is because of dropping of wicks. What has happened is some of the good trades which were possible in Nifty and Bank Nifty, they were not getting, they were not giving a right kind of advantage. So because of fall in the wicks in the current expiry, other expiries are still okay. So when we checked with some of the stocks, Reliance was one of the stocks where those kind of trades are still possible. We said, okay, let us analyze for Reliance now. And as we are seeing, this is the best stock for today. So maybe for few days we will definitely try to pick up some stocks. But obviously the stock should be good, should have good liquidity in options. Only then option chain analysis makes sense. If we are analyzing a stock where there is hardly any option chain activity or any liquidity in options, then any kind of option chain analysis will be meaningless. But definitely yes, Reliance is one stock where you get good liquidity at many strike prices, right? So let's see, and from there hopefully what Mr. Kamu is asking, we will be able to answer those questions on Reliance with this option analysis. Okay, Reliance today closed somewhere close to 2061, 2061.80, something like that, if I'm not wrong. So 2060 is at the money, right? So if you see Reliance, even after a good move, now 2060 is at the money. And if you see where is the highest open interest, the same stats we will apply with Reliance also, the same style of analysis. Here on call side, if you see the highest open interest, and which is pretty decent. Remember, in this case, the lot size is 250, it's not 75, it's 250. So 14,509 is a huge open interest at 2100 strike, right? 2100 strike is 14,519, and that is the highest open interest on call side. If you see on put side, okay, there are two open interests which are of interest, right? So one is 4283 and other is 4689. Even if you combine both, they contribute somewhere around 9,000 positions only. But see, at call it's 14,519 positions anyway. So if we literally take that, okay, highest open interest is 1900 on put side, right? So if you see 1900 on put side and 2100 on call side, so 2100 and 1900, if I just try to take a midpoint of these two, that means it can be trade can be towards 2000. But if I take 2000 as highest open interest, which is very close to highest open interest on put side, right? So then 2000 and 2100, as of now traders are thinking that, okay, this should be the range of uh, Reliance, which is 2100, will definitely, should definitely act as a resistance to the stock, and 2000 should act as a good support. Seeing today's move, it looks that, okay, it may have a runaway rally towards 2100, 2200, 2300. That is what you see all of us start feeling when the stock is giving a big move. But it may or may not happen, because as of now still traders, huge number of traders are sitting. And now if we see change of open interest, even today also the stock has given a big move. But today also 2036 change in open interest. That means today also 2036 positions are created. And generally we read this data, although number of buyers, number of sellers are always same, but generally we read this data with the perspective of option sellers. And we are saying today also at 2100, even when Reliance has gone to sorry, 2060, still lot of shorting of calls has been done at 2100. So that means traders are still thinking whatever is happening to the Reliance, or whatever has happened to the Reliance, still it may not cross 2100 very easily. And even if I add the premium of 47 rupees to 2100, so let us say another 50 rupees. So 2150 should be a decent resistance in case everything is going as per what major traders in the market are thinking. If there is some big news, most of the news definitely must have played out. But if there is something really abnormal and market churning and all that, it can go about 2150. But as of now, this data is showing that, okay, 2150 or 2147.5 should be the level to watch for. But yes, this is not a weekly expiry in stocks. We have a monthly expiry only. So these things can change. If these things change pretty fast, then we can expect certain changes in this analysis. So if you see this here, what has happened? 8,000 positions minus 800 today because of its up move. Most of these option sellers who were sitting at 2,000 call, they ran up from this place, and maybe they created their positions at 2060, 2080, 2100, and 2120. So what happens is when stock gives a big run up on first day, what happens that okay, most of the people who get stuck up in their trades, they will shift their positions, and they will try to cover their positions and maybe create their positions at a higher level. But if the stock continuously runs up for second day also, then these people start uh, leaving the battle. They will start leaving the battle, and maybe they will start pushing their trades towards put side also. So that needs to be seen that okay, do we get another one day of big move in the Reliance? If that happens, then definitely this data can change. But still, only 2036 positions are added, but still it is 14,519. That means it's not the whole data which has built up today. But definitely, if you add these to 8,300 and 8,000, till yesterday, 2,000 was highest open interest for Reliance. So today, I don't know if you talk about technical analysis and all. So this is a sort of a short term breakout that okay, Reliance has gone past its highest open interest level of 2,000, because till yesterday, obviously, because it is minus 8,000 and this is plus 8,300, highest open interest on call side would have been 16,307, must have been at 2,000 levels. Today, because of a big run up, that level got broken, and now we have a fresh level of highest open interest, which is 2,100. Generally, when this happens, we have to wait and watch for second day also, because first day people are able to adjust the position. But what happens on second day? Let me have your views. What happens on second day? Meanwhile, I'll take a small 5 seconds break for sip of water, and request all of you to please click on the like button so that we can come up with option chain analysis of more stocks. There is still certain things to come in this. So please go ahead and click on the like button. If you're seeing it on mobile, maybe you need to close the chat window for a while and then come back to it after clicking the like button. Just give me 5 seconds. Okay, thanks for few more likes. Okay, now today it has changed. So generally it is not that okay, every day these things change. You will not see that okay, every day highest open interest is changing. So today definitely a big point, definitely a you can say a big day for option chain of Reliance, and it may not keep on changing every day. We have to just wait and watch for another day, right? Now if you see other things on downside, definitely now you can talk like an expert that okay, in case it breaks 2000 minus 30 rupees, that means 1970. If it breaks 1970, then next stop is at 1900, right? So most of the time this option chain analysis is doing almost all the work of what a short-term technical analysis chart is doing, right? So if it breaks 1970, how I'm coming to that 1970? 2000 minus 30 rupees premium. If it breaks 1970, that means most of the traders who are sitting at 2000 will get it wrong as far as sellers are concerned, and then they can run away with their positions, and then there can be a counter selling pressure on the stock on the cash side also, and definitely stock can again go back towards 1900 levels. So as of now, this option chain definitely saying that okay, Reliance is between 2000 and 2100. If we see the straddle premium, let's try to find that out. So stock is 2061. What is the straddle premium in this case? 65 rupees on call side, and 56 rupees on put side. So how much is that? 60 plus 50, 110, and another 11 rupees. Another 11 rupees means 121. So again, it says 2060 plus another 121 rupees, which makes it somewhere close to 2180. So this is a mismatch. This is a mismatch. The straddle premium is saying that okay, it can go up to 2180, 2200, but our highest open interest is saying 2100. That means we need to again observe the data. There is a mismatch. The highest open interest should be the external boundary or within one or two strikes of the external boundary. So had it been that okay, my straddle premium is saying that okay, it can go up to 2120 or 2080, I would say that okay, this will get respected. Right now we must wait for another data, because straddle premium, based on straddle premium, the stock is showing that okay, it can move even up to 2180 or 2200 levels, but 2200 levels should be the uh, final resistance. If it doesn't, you see, have some totally you can say shocking news or something totally new for the traders, then that will be the final resistance. But definitely this stock needs to be watched in case 2100 gets as an highest open interest, whether 2100 gets surpassed or not. That is very important. And on the downside, if I say 120 rupees minus 2060, that definitely makes it somewhere close to 1950. And so the second highest the highest open interest obviously is 1900. So 1960, 1950 should be the lower level. It should not go below that. So downside seems to be pretty much okay within the range based on this data. Definitely traders are giving mixed signals as far as upside is concerned, right? So if I see it other way, the fourth method, 2100 is highest and 1900 highest, which is giving me a level of 2000. And if you see highest change in open interest, open interest, I will take it as this. I will take a positive change only, not a negative one. So which is again showing the same number as 2100, but this is showing a number as 2000. So average of 2000 and 2100 makes it 2050. So change in highest open interest is suggesting 2050, but highest open interest is suggesting 19 and 21 2000. So 2050 to 2000, that means somewhere close to 2025. So if everything is logical, if traders are not going to go wrong, then we should play this stock towards 2025 kind of a movement, as long as this data persists, right? As long as this data is there, this is where we should be eyeing, and we need to focus that okay, whether this data is changing. If the data is changing, then our analysis should also change, and based on new data, new analysis, we have to again consider what is that important level. As of now, I'll say 2025 is a very important level for Am I audible now? Okay, hopefully now it's audible. Voice is okay. What about the video part? Okay, okay, thank God. So you changed, I think, the internet settings, and with that, video also got stopped for a few seconds. Audible now? Thanks, thanks. Uh, Both are okay, Mr. Modi says. Okay, where was I? I'm totally lost. Where was I? What was I talking about in this chart? So the fourth method, yes, the last method, which is a very empirical method. I do not know what is the logic behind that. The fourth method, which I always analyze, which always works, almost always works, is you take average of 4 points. What are those 4 points in this case? One point is the highest open interest on call side. Another point is the highest open interest on put side. So this is giving me 1900 and 2100. The average comes to be 2000, and then I take highest open interest of uh, highest change in open interest on call side, which is again 2100, but highest change in open interest on put side is 2000. So 2000 and 2100 is giving me an average of 2050. So 2050 with 2000 gives me an average of 2025. So if this all these four quadrants remain similar, then definitely we can expect that okay, it can go towards 2025 2025. Now again, I'll say there is a inherent advantage for some of the trades in which you see we are looking for an employed volatility advantage. Can you tell me which are those option strategies wherein you are looking for an IV advantage? So today VIX is more down by more than 3%. So what has happened is for all the kind of spreads wherein you are playing with different expiries. I'm not able to pull out that chart now, right now. So if you see 18th Feb Nifty versus 25th Feb, or if you see 25th Feb Nifty versus 25th March, the employed volatility of 25th March is more than 25th Feb. Now, whenever this happens, then in all kinds of time spreads, whether they are calendar spreads, whether they are diagonal spreads, whether they are ratio calendar spreads, what happens? We are on a disadvantageous side as far as VIX is concerned. So in those cases, it becomes very difficult to create any kind of calendar spreads. It is not difficult. I'll say it is not advisable to create any kind of calendar spreads or diagonal spreads, ratio calendar spreads on Nifty. If tomorrow things settle down, let us say current VIX goes up and far off VIX settles down, which may not happen very easily. That case, yes, we are again game for any kind of calendar spreads, double calendar spreads, diagonal spreads, ratio calendar spreads in index only. But as of now, it is not giving any advantage in Nifty because the strikes which I want to buy, the expiries in which I want to buy are costlier. They are having higher wicks, higher implied volatility compared to the strikes which I am selling. They are having lower implied volatility. So then the IV advantage totally goes away. So in Nifty it is not happening, but if you see in Reliance, 25th Feb versus 25th March. Here we do not have any weekly options. So if you want to create a calendar spread or a ratio calendar spread or a diagonal spread in Reliance, that is still at an advantage because again 25th Feb employed volatilities are higher. So whichever strikes you are trying to sell, their implied volatility should be higher. If we have a very good gap between selling strike implied volatility and buying strike implied volatility, the trade becomes much more juicer for us, right? But as of now, Reliance definitely has that advantage that okay, 25th Feb expiries are having better volatility, so means they are having better option premiums. So if option premiums are more, obviously it makes sense to sell those options, and to protect we need to buy 25th March, and 25th March are also pretty much liquid. So that is why sometimes we have to like slightly digress from Nifty also. If you really want to take benefit of these spreads give you a protection which is pretty wide in range. So these can be done as of now in Reliance, and I have not checked uh, option chains of many other good stocks like HDFC Bank, SBI. These are few stocks whose options are pretty much liquid as you can say Nifty options. So there also, if you're trying to create calendar spreads, first thing we must always check whether the IV advantage is there or not. And hopefully all of you understood now what I'm talking about. What is that IV advantage? So I would request all of you, please write it in the chat window, write it in the comment section. Do you understand IV advantage when it comes to time spreads? And according to your understanding, what do we mean by IV advantage in time spreads? Time spreads means calendar spreads and double calendar spreads and diagonal spreads and ratio calendar spreads, right? So very important to do option chain analysis whenever we are doing this kind of a strategy, so that we are able to know whether IV is at an advantage or whether IV disadvantage is there, right? And welcome to all of you who have already joined this workshop, which is on 13th Feb, calendar spreads, double calendar spreads, and ratio calendar spreads. And how we can use calendar spreads as extremely short term trades, and how we can use calendar spreads as very long term trades. They become pretty passive. And then ratio calendar spreads can be pretty much useful in stocks like Reliance, in stocks like SBI, in stocks which are very liquid as far as their options trades are concerned. So definitely we'll try to give some examples of ratio calendar spreads for some stocks also, and we'll try to do a little bit of back testing on this also in this workshop. So all of you have joined, most welcome to them. And if there are some more participants who are willing to join, you can contact us at this number. You can send us a WhatsApp, or you can talk to us, and in case of any queries. And if you're a super smart hedge member, obviously 40% discount will be applicable for you, right? What Mr. Bhaumik is saying, will calendar spread, double calendar spread be okay? It continues to explode upwards. You see, again, most of the selling strategies will have a range, right? So even calendar spread or double calendar spread will have a range. So if the market remains, if the stock remains within that range, it is good. Otherwise, we have to do some adjustments. So we definitely talk about adjustment, that okay, how you can move in calendar spreads only, and then you can always keep on, because any good calendar spread will have a very decent range. Most of the time the stock or the Nifty may move within that range only, right? But sometimes yes, things can go really volatile. So how to expand that range of the calendar spread, that is the main you see adjustment criteria which we discuss about in this workshop. All of you have already attended, you know how to increase the profitability range of your calendar spread. And there are tried and tested method for that, and most of the time it works. If it's really you see a kind of an unfortunate market wherein the stock is moved up by 25-30% and then gone down by 25-30%, those are rare cases. In those cases, if range is broken, still the advantage is the damages are not very heavy, right? Any toss and combo to workshop, please, Mr. Ganesh? I think you have requested us earlier also. We are definitely planning. We may not be planning in the month of Feb, but in the month of March, or maybe in the month of April, we will be planning toss and combo to workshop also, and we are even planning to combine both, right? Let's see. As of now, this is the only workshop we have planned, and nothing on 14th Feb, nothing on 21st Feb, nothing on 28th. So let's see, only in March we will be planning some more workshops, right? And all of you who want to join in this live chat can join our gold memberships. Want to connect to us for queries on your trades, you can connect our diamond, you can join our diamond membership. Now here I would like to again tell all smart hedges and super smart hedges, they also have access to our diamond membership. So if you have any questions, many of you are asking a lot of questions, and that's good, that makes it very interactive. But many of you may not be knowing that if you're a super smart hedge member or a smart hedge member, you can still set for your trades, you can ask our advice, and whatever best possible we can tell you, we will definitely give you that advice. So all those questions you can send anytime, but we are answering those queries from 4 p.m. to 6 p.m. So do not feel shy in asking questions. Please go ahead and ask your questions if you are either diamond or smart hedge or super smart hedge member. If you want to join, you can click on this join button, or there is a link given in the description also, right? For joining the workshop, you can contact us on this number, or you can write to us at info@option school also. Thanks for all the likes. We are just maybe a few short of that three-digit number, but I know all of you really, before going back, click on that like button. And definitely, I'll say, okay, if you really like the content, only then click and like button. Don't listen to me that unnecessarily I'm forcing you to click on that like button. No need to do that. And if you encourage us, uh, that motivates us to do something new. And so maybe first or second time we are analyzing Reliance option chain, and if all of you like it, and you write it in the comment section also that okay, which stocks option chain analysis you want, we will definitely include those option chain analysis, a quick analysis of option chain for all those stocks in our upcoming videos also, right? So share this video to somebody whom you think it will be useful, and write your comments, write your questions, feedback, suggestion, queries. And another question which I have asked you is, what do we mean by IV advantage when we are talking about any calendar spreads? So do write your understanding on that, and we will reply to each and every comment. If you're not subscribed to the channel, go ahead and click to the subscribe button so that you can participate in some interesting discussions on options trading. Thanks to all of you. Have a great day. If you have rolled over any positions, don't worry. Now you have taken more time from the market, and based on whatever is happening in the market, you can always adjust your position. So wish you all the best. Take care of all your trades on Friday, and then you can definitely enjoy your weekend. And by Monday, now we are moving towards the expiry of the month. This is a small month, although the small month has already shown a big range of the market, but still, hopefully, things will be pretty normal in next 2 weeks, and hopefully, most of the option sellers or option traders who are trading in good strategies will be able to get good money from the market. Thanks to all of you. See you all tomorrow again at same time 9 p.m. Have a great day. Thank you.